Okay. Well, good evening, everyone. Good evening. Good evening. Let's make sure that our sound is good. If you guys can let us know in the comments whether or not you can hear us well before we get started. I just want to make sure everything's good. It seems like I'm a little choppy this evening. For those who don't know me, I am Patricia Winfield, the owner of Tax and Things Financial Services. And you see one of another tax professional, Ms. Latrice Davis with Okay, I'm going to mess it up. Consultations LLC here. I'm going to look at, make sure you guys can hear us good. Welcome, welcome, welcome. Thank you, thank you. So, good evening, good evening. We decided that it is time for us to start talking about tax season. I know we're right in slam dead in the middle of it, but we're getting frustrated. And so we want to eliminate our frustration and your frustration by sharing some information with you guys. So as you're coming along onto, can you please do us a favor? Tag and share, tag and share, tag and share, because this tonight we believe is going to be critical information for everyone who comes on, no matter whether you've already completed your taxes or whether or not you're in the midst of doing them, so we can make sure that you are well informed. Okay. So again, good evening. Latrice, I'm going to allow you to introduce yourself and say before we get into what we're going to talk about tonight. How about that?
That'll work. So, good evening. My name is Latrice Davis. I'm the owner of Legacy Consultations. This is my third year in business. I think I kind of inherited these traits from my mom. She's been doing taxes probably as long as I've been alive. In my business, where I do personal business taxes, I also do business startup and business coaching and bookkeeping. I think the drive that keeps me going is the desire to educate, like not just prepare for them or put numbers in the system, but to have my clients understand exactly what's going on to allow them to make the best decisions for themselves. So it's a great pleasure to be with Miss Winfield tonight because I reached out to her last year starting when I had questions, and that is a prime example how don't ever feel like you can't reach out to someone for help because we nobody knows everything, and it's like sometimes you need somebody to remind you that it's okay. And but last year was very frustrating, if I can speak for the both of us, because IRS was backed up. And so we're still dealing with some of that stuff. So tonight will be a great information session. So if you have questions as we go along, just feel free to put them in the chat. And I think you can see them too, right? The questions.
Yes.
Okay, yeah.
Awesome. Awesome. Yes. So I am again Patricia Winfield, owner of Tax and Things Financial Services. I've been in business for 20 plus years and I am still learning, guys. I am in the process of rebranding my business to Building Blocks to Business. That's something down the line that I'm working on because I don't just do taxes. One of the things that we do in both our businesses strategically help small businesses become better. And with doing that, the taxes is a big part, but it's actually the end result of what happens throughout the year. And so, one of the things that we are doing is we're talking about taxes, and on Thursdays, we're going to talk about business. We're going to make sure that you guys are well informed between Miss Latrice and some other tax professionals that I know. I will bring on and we will all share because we're all in a different place. We all have different experiences. And I am the senior of all of them that I know, not just because I've been in business longer, but in age as well. So, but recognize that age has no number and it doesn't determine your knowledge. So it's so important that we all understand wherever we are in business that we can help one another. And that's what my business is all about, is helping other businesses, even other tax preparers, other tax professionals. I had a client say this to me, that they were introduced to a tax preparer and not a tax professional. And there is a big difference. Anyone can grab software from TurboTax to TaxAct or whatever and prepare someone's taxes. And they're going to give them to you and tell you they're done. and you can submit them and you may get a refund. But a tax professional will stand there with you, sign their name to the bottom of the tax return to make sure you know that they are credible. Anything that says somebody else did and says it's self-prepared, that's not done by a tax professional. So I want to make sure things like that we talk about and let you know we are striving to get this right. We both study different areas to make sure that we're doing what we need to get done to be an expert. And the what is it called? It's called the my mind just went. I can see it. It's called the SNEED. What do the words stand for? Tell me, Latrice. I'll get it by the end. So don't let me stumble on my own words tonight. But let's get started. As you got questions, as she said, put them in the comment section. But we're getting ready. We do have an agenda of what we want to talk about. We want to get started. Let me do that. We'll start there. And then, guys, look, we may have an agenda, but if you guys got questions, we're not so formal that we can't change. All right. Tax Talks Tuesdays. It's going to be talking about taxes, and everybody's not in the same place. So you'll know we've already had the opportunity to introduce ourselves, so you guys know who we are. You know how to find us. This is being transmitted for me from my personal page, and Latrice has shared it on hers, and then my business page, and we'll work as the other business tax professional come in to add them so that this can be shared as well in anyone's page. All right. So these are what our general topics are for today. We're going to talk about the child tax credit, earned income credit, advanced earned income credit, filing status, and the W-4, the new W-4. All right. So these are the topics that we'll talk about briefly. Let's start with the child tax credit. Now, even though we both have some information to talk about the child tax credit, Latrice, I'm not going to do all the talking because I'm used to that. Because that is my role. I'm going to allow you to start off, and I'm going to remove this. And so you can start, and let's talk about the child tax credit. Now, I do have a few notes if you need something, and I'll piggyback because I think this has been a problem. Let's talk about the challenges or the income guidelines for the child tax credit and what happened to those folks who got the advance. How about that? Can you start with that part for me?
I will start. Okay. So the advanced child tax credit, I think, was a misconception. People felt like they were given this additional money up front that was going to hurt them in the end, when in actuality, it was half of what you would have got a credit for when you filed your taxes. The reason why it's a credit on your taxes is not actual money, but this time they pull half of that money out and they say, hey, we're going to give you half of this over the period from July to December. Now, what problems people ran into is those parents who split the time from carrying the child. That's one thing I definitely ran into. And one thing I think was kind of muddy water was not explaining that if this coming tax year, which was tax year 2020, if that was not going to be the year that you were going to claim the child, then you may want to opt out of getting that tax advance because you would not have that dependent on your tax to carry that child over. So that is some issues that people have ran into with that. So when we talk about the child tax advance, so families who are eligible, they were for 2022, it's $2,000 per child. And so the reason why people got different amounts is because of the age difference, right? So we went from birth to, what was this, 6 years? Is it 6 years, Patricia? And then
they're up to 18.
Right, but the difference in the money. Like
yes.
Yeah, so the difference in the money was based upon the age of the child.
6 and then up to 17. So
right.
your qualifying children were ages up to 6 for the max, and that child received $3,600 for the year.
Right. So what you were supposed to get was half of the $3,600 from July to December, and then you will get the remaining credit on your taxes when you file for that child. One stipulation, I think it's the pandemic had a lot to do with a lot of notifications and education being given out about how this kind of works. Um, an issue I have run into is a husband and wife who filed joint. One of the filers opted out, the other one didn't. So what went on behind the computer screen with that, I don't know. But when you get the letter, it clearly says that this person received this amount of money, their portion of the credit. So those are a lot of things that came into play. A couple of advice that I gave people about accepting that child advance, that advance credit, was if you're one of those people that ride the line between owing money and not, I think, I advised them. I had questions. I said, hey, you know what? I just think it's in your best interest to hold back, because some people are right on that fine line of like, oh, I only owe $100 this year. Okay, so with that child, you owed $100. So now, it's kind of like you should think about things. So now what you do when you file your taxes, you get a letter from the IRS, and most people got 2 letters. Now, the first letter was about the total amount of advanced child tax credit you received. That's in line 1. And then line 2 tells you how many children you got the money for. Because you did have the option to, if you had 2 children, you could have went in there and opted to take the credit for 1 child and not 2. So that information has to be put on. Ms. Winfield can attest to that. I asked for the form because people will say, and I say, if you don't give me the correct amount, that's going to delay your refund, and they will definitely, what happened? Hold on 1 second. I'm sorry. Somebody tried to call. They will definitely hold your refund back for that. So the second letter you will get is your stimulus amount. And I think a lot of people forgot about that money came between January and March. And I said, okay, you're going to get a letter. And I will admit, I had a client who just got his letter yesterday. And I told him, I said, hey, let's go back to your bank account, January through March, and see if you had any direct deposit that came from the U.S. Treasury. And more than likely, if it was a $1,400, whatever, more than likely that was your last stimulus. And so that money has to be included. Another thing to consider with this child advance tax credit is like my son will be 17 in September. So this will be the last year for me that, like, bon voyage. I'm going to wait till the last minute to file, because that's it. This will be my last year that I will be able to file him as a child dependent. There's a difference between a child dependent and a dependent, because he'll still be my dependent when he's in college, but I will not get the child tax credit for him. He's still biologically mine, but it's a difference. And I think that's where the hiccup comes in as well, because people say, well, I support my child within college. Well, they're 18, they're 19 years old. So technically they of an adult age, you only get the credit for the dependent.
Correct. And let's talk about that before we say anything else, because people don't realize, a lot of them don't realize, when the tax laws changed and they removed the exemption. So people were accustomed to getting that large dollar amount per exemption, even for those dependents that were above the age of 17. They're not accustomed to that $500.
Right.
And that was a problem, because you didn't make the adjustments on your W-4, or you did not know, even before they came up with the new W-4, you did not understand what you needed to do in order to make sure. And your tax preparer, tax professional, whomever you dealt with, the accountant, the CPA, they did not advise you that you need to reevaluate what your withholdings look like and how it was going to affect you come the next tax year.
Right. I take tax season as a moment to reflect and go back over. I like go through my tax returns, and I'm like, okay, so let's think ahead. Like my son will be 17 in September. I need to go to my HR department and make an adjustment to take additional tax out, because I won't have that much. To go from $2,000, $3,000 to $500. That's a significant drop. So you have to make, because most jobs, thankfully, you get a raise. You may get a yearly raise. You know, my full-time job, I work for the government, so we get a cost of living raise, and nurses get certain raises every 2 years. So so now the way I think is, I always tell people I pay myself on the back end. You know, when you don't want to pay into the I'm always paying the taxes. Well, you know what? One day I don't want to be at the bedside. So how do I prepare myself financially so that I'll be able to retire and be comfortable? So what I do is I go in and I adjust my withholdings to take out more to apply to my retirement. And that money will be, depending on what type of account you put it in, it's either taxed then or it's taxed later. But the point of the matter is, no matter what, when your dependents or your children kind of change in age, you need to make adjustments in your W-4 to compensate for that, or else you will be one of those ones that will continuously pay into it. Later on, we'll talk about the W-4, the new W-4. It can be kind of confusing because everybody's used to it being a certain type of way. So I want to kind of explain how you can help yourself. Like, remember what we just talked about here. So when we talk about the W-4, it'll all make sense.
It will definitely all make sense. Even in the fact of one of the biggest things, and it's not a topic that we're going to talk about tonight, but I'm just going to kind of throw it in there, the standard deduction, which also fall into the exemption. All of that came together in the new tax laws that when our previous president, President Trump, put into place, and a lot of people didn't take it seriously enough to understand that this was going to impact them years down, because it's up until 2025, y'all.
Yeah.
These new tax laws that we are actually living through is in place through 2025. And so because of that, you have to plan. And nobody wants to do tax planning. And first of all, let me just say this. Not only do you not want to do it, you don't want to pay for it. I'm going to leave that right there. Let's go on to our next topic, because we're in this place in this season in our life where business is important, and you've got to make a decision yourself individually. I'm talking about taxpayers that come to us. You've got to make sure that you make a decision. How do you value the service that you're receiving? And so if you're coming and we're giving you good service and we're advising you, then believe me, you need to pay for it.
I think a lot of the thing is, you know, people, like, when you buy a good or a product, you have the product in your hand. When people provide a service, it may not be nothing that's visible, but the information and the service that they are providing to you will have an effect on, you know, especially when it's financial services, they'll have an effect on your finances. So Google is good for some things, but then remember that anybody can put something on Google. So that's something to kind of look at too.
And that's where you got to look at your integrity. And that's where my business is one big thing for me is my integrity. And so when I share something, and even when I don't know it, and I tell a client, I'm going to have to research it, I literally make sure that I research it. One of the tools that I use is I need to probably take off the blurry because you can't see this because I got a blurry screen. Maybe, okay. I have to put it in front of my face so you can see the U.S. tax guide. Guys, every year tax laws change. And so we have to stay abreast. There are a lot of stuff that we have here because it never changes. But there are a lot of things that do change. And we have to be abreast of those laws. And so somebody that's doing TurboTax, I'm not downing them. Somebody that's doing Tax Act, just doing it to make some extra money on the side, because there are plenty of people that do that. I'm not trying to cut their money, but I'm just trying to get you get what you pay for. That's what I tell clients that are in the military and they go to the base to get their taxes done. It's free. They get what they pay for. So you can't complain when you didn't pay for it. All right. Next topic. Well, I go on a tangent. Thank you, darling. We appreciate it. So that's what we asked you guys to share. We're going to be doing this on Tuesdays, like I said, and I'll have more tax professionals because all of us experience something different. And so we want to make sure we help them share what's needed, the information, and not waste your time. So next topic is going to be the earned income credit. I just want to kind of throw this back up there. Earned income credit and filing status are the next two, and they will save the W-4 for last. I just want to make sure. So next thing is earned income credit. So now look, woo! That before, it means just like it always have been, the earned income credit is a big credit. Everybody live for that credit. People live to get that that earned income credit. The child tax credit is just something extra that they've added over the year. But this earned income credit, people go to jail for the earned income credit.
Now that right there, they will go to jail and some more stuff behind that. So I will one key point I want to remember: if you go to a tax professional and we ask you for proof of documentation, it's to cover us and to cover you. One thing you may have, let's say that you a grandmother and you take care of your grandson or granddaughter, right? You fully are the one to finance. Nobody's saying that you can't carry that child, but we need documentation and proof. And it's the actual form from the IRS that gives you permission to carry that child, and so it's stipulations. It's like, how long did the child live with you? The child has to actually live with you for more than half of the year. The child has to be related to you. So these are the things that come up to get people in trouble, and they get this letter after they've been audited that says you have been banned from utilizing the earned income tax credit. Now, if you get banned for using it for I forget what the first reason is, but you're banned for 2 years. But if they find out you did it for fraudulent reasons, then you get banned for 10 years. And the only way you will get a letter once your time is up, and even then, when you get a letter, you have to submit a form. I think it's 8862 or something. You have to with your taxes, and you have to fill that form out verbatim and send it in along with your tax forms. Because now what happened is sometimes I do know, like, somebody may have already filed the child. You didn't know, and one of the two is going to get in trouble. Like, who did the child actually live with, or whose child is it? Sometimes it may be something technical, and these are mathematical errors, like if you put in the wrong social security number. But the way the systems are set up that professionals use, they will kick out the form and say it doesn't match. The name and the social security number do not match. So sometimes it's a hard stop for us, and that's what I found out is the difference in some of the programs that you buy in the store, like TurboTax, H&R Block, those programs. Sometimes they won't catch some of the stuff, or they'll give you a code and say why it was rejected, and you don't even know what the code is for. So I helped another person, for example, with theirs, and she couldn't figure out. And she said, "Well, I never got a letter." And I said, "Well," she said, "I got audited." That's what she said. "I got audited in 2019. I said, "So remember, the pandemic hit in 2020. And it's a great possibility that your notification got lost in the shuffle with everybody else's. But if you got audited, you should have got a letter saying why you got audited or what the findings of the audit were. Because now when this person is putting your information in, it's saying you are disallowed for the earned income tax credit." So I gave her the information to call to figure out why. So it's like it's certain qualifications that you have to meet. You don't ever want to get banned from using it. Mm-hmm. They will catch up. So, like, if you think an audit is just for this year, they can audit you for up to 7 years back, and they will go and pick through your taxes with a fine-tooth comb. And I think that's probably more of a stressor than anything else.
And understand, whatever year that they're auditing, if they make a decision, let me just share this. The reason I got into taxes is because I got audited. Okay. And when I got audited that particular year, it was not because I did anything wrong. Believe it or not, I was a single mom with one child at that time, I believe. And when I was audited, because I wasn't married to the father, there is a tax law that said it's possibility that neither one of us could claim that child because I've never married the father. And so but the tax agent, the tax representative could have said, it's okay. We don't have to uphold that. That's not a law that they have to keep in place, that they have to make it subjected to your return. but this particular examiner did. And so she removed my daughter off of my taxes for the year she was auditing. And they went back 1 year and they went forward 1 year. That's 3 years where I received earned income credit, where I received the child tax credit for that one child. And they removed it. Not because I did anything fraudulent, but because of a tax law. So you got to understand from that point on, I was like, okay, this is something I don't want to happen to anyone else. And they made me prove based on receipts how much money I spent on the child. Most people do not keep receipts on every time you give your child some money, every time you go to the movies, every time you buy food. These are things that you do not do because this is normal life. But I found from that moment on that I needed to be a receipt keeper. And I needed to have documentation for everything because I was subject to be audited by anybody for any reason. And so documentation is key. Documentation is king. King, y'all. I'm telling you. It will save you when you are doing things correct. Even if it's the wrong method, they take in consideration that you were going on the information that you knew and you were consistent in doing it as long as it's not breaking the law. This is how you kept your documentation. So those things matter. So the earned income credit can be removed. And listen, if you're one of those people who got $5,000 worth of earned income credit because you failed, and this is how people get in trouble. They get in trouble because there is what they call a sweet spot. Okay. The sweet spot means that you make just enough income for those 3 babies to get $5,500. Okay, let me look. I'm looking in this book because I didn't even realize that hadn't even looked at the number this year. So it was $6,728 for 3 children. People go to jail for stuff like that, y'all. They go to jail because they try to make sure that they hit that sweet spot. And I don't know where you live, and I don't know what kind of house you live in. But $6,000 is not enough to fund you for the year for 3 children.
That's the thing. A lot of them will modify their income to hit the sweet spot. Like they could be right over the threshold of getting that earned income tax credit, and somewhere along the line they will do something to kind of change the numbers, so they will be under there. And I'm like, it's not worth it.
It's absolutely not worth it. It's not. I tell clients, and I say this, I'm saying this on live, and I look good in the color orange. I like orange, but it's not my preference to wear every day. And I love y'all. I love every person that come in my office. But let me tell you what I'm not going to do. I am not going to go to jail for you. I'm not going to spend no time for any of you. Okay. And that's what we want you guys to understand, because when you get audited, it ain't just you being audited. The preparer is being audited as well. And so our integrity is at stake. So we're not going to do anything that's going to cause us. This is our livelihood. So we need you guys when it comes to the earned income credit, the child tax credit, all of these things, to pay attention. When we tell y'all something, it ain't just about us making more money. It's about us trying to help you stay free.
One thing about it, for any business owner out there, every customer ain't your customer. And everybody wants to make money, but I don't want the headache. So, some things you can do will quickly disqualify a client in my office. If I ask you for certain forms or, documentation, you're telling me that you made $10,000 in your business, but you spent $12,000 on supplies. Well, I need the receipts. I need to see, do you have a separate bank account for your business? I need to see that, because like she said, it's not just about you getting audited. They're going to come after me. And we have a due diligence form that we have to fill out. Did we do everything possible to get the information that we needed correctly? Did we verify stuff? So some things just seem off, and you go by intuition, or well, bring your receipts in. So this is where, like, doing tax preparing, like when you are preparing your client for the next season, hey, you know what? You didn't have exactly everything I needed, but this, I'm gonna send this list out so you can work on this list during the year, and you can keep up with this stuff. And so at the end of the year, it's not a big deal. You just give me the information and we go from there, because it saves everybody on the end. And also, it's like, if we give advice. We give advice about, we just told you what to do with your W-4, and when your children are changing age, to kind of help save you. So those are the things, the tips we offer that you may not get from bigger businesses. Like, I'm not going to call any of the names, but bigger businesses that do taxes will just do forms. So, the thing is, like, you need someone who's looking out for your best interest throughout the year, the other 11 months, not just that 1 month you come there to file your taxes.
Most definitely. One of the things I will always say, I don't have no problem with saying those names. Not Jackson Hewitt, H&R Block, Liberty, whomever you decide to go to. That is your preference, but you are an assembly line. I want you to understand what you mean to them. They need to know. I mean, it's a numbers game, just like the taxes is numbers. Getting the clients in, because you have 4 short months to do it. And so some people are trying to see everybody they can so that they can get their numbers up. I get it, but not at the extent of your integrity, not at the extent of not getting it right. So before we move on to the next topic, I just want to share income for the earned income credit. You can get it if you're single. You can get it as a head of household. You can get it as a qualifying widower. You can get it filing married, but you can't get it filing married, filing separate. You can't. And let me say this, for those folks who live in the same household and make a decision. See, I ain't scared of none of y'all. And this is how I deal with my clients. My integrity. You living together, and at tax season, all of a sudden you got a new address. Y'all no longer live together. You single and he had a household, or vice versa. That's illegal. And you might not go to jail, but you will pay. And guess what? If they catch you for 1 year, you already heard Latrice say, they can audit you for 10 years. And if they go back, IRS can find out everything, right? They're the government. They're connected to other government agencies, y'all. So if they find out for the last 5 years, you and your husband been cohabitating in the same house at the same address, except for at tax season. All of a sudden at tax season, he lived on Rome Street and she lived on Washington. Guess what's going to happen?
And the thing is, the interest and penalty that you'll get for that is compounded. The interest is compounded daily, if I'm not mistaken. So when you start talking about filing your taxes late, so it's 2 fees. That's probably another tax talk time. But I always tell people, you get 2 fees. You get a fee for filing late, and you get a fee for paying late. So it's probably in your best interest to go ahead and file on time and then do payment arrangements. Because looking over some of my clients, and they original bill was $4,000, and then we're in the new year and they owe like $5,000-$6,000. That's $2,000 you could have kept in your pocket. But these are the things you will have to deal with if they go back and audit your taxes and figure out that you and your husband lived in the same house, with one file single, one file head of household, and then they can say, oh, so the filing status for both were incorrect.
Correct. And you got to pay all the money back that you got.
Yeah.
So
the standard deduction is different for single and for head of household. And because you have another option, do married filing separate, or prepare yourself for the tax season ahead for this ahead of time, where you won't have to owe as much.
And talking to your tax professional will help you. I'm not saying we ain't gonna charge you a fee for consultation, because look, this is our time. we're in 2022. For any of my clients that's listening to this live, I want you to know that if you're calling my number, if you need to make an appointment, and it's going to cost you for a consultation. Why? Because for the last 20 years, I gave it to you free and you did not take notice. We moving forward. We're in a new season because I can't keep doing the same thing and expect different results from you because all you're giving me is the same thing. All right, I'm moving on because y'all know I can get on the soapbox. I'm trying not to be on too many soapboxes because I want you guys to really get this and not feel like we're badgering you all, but we're providing good information. So as you're coming along, please do me a favor, tag and share with someone. Let them know that we're on. This is Tuesday Tax Talks, and we're going to be doing this. We'll probably do it even after season because guess what? After season, you still need good tax information.
Yep. Also, if you have any questions, you can put them in the chat and we'll
definitely put your questions in the chat as we're moving on. Let's go to our next topic. So we've talked about let's talk about the filing status real quick. We dabbed a little bit on it. The filing statuses are single, head of household, married filing separately, and qualifying widower. Most times people don't even know what that last one is. But let's talk about the ones that we all know and we practice. Single. Single is an individual who does not, well, and I'm going to say it does not have a dependent, but you could have a dependent if you're single, and we'll talk about that. Maybe it's probably won't be today because that's going to be a little bit longer as to why would you file single. You might be that person that had to file that 8862, and you not only did you abuse the earned income credit, you abused the filing status of head of household. Right. All right. So, and then depending on the people who live in the house too. So you got a lot of things that go along with the filing status. Head of household. It does not mean you're the head of the house. It does not mean you're the one that's paying the bills. It is a government filing status. It's a government status that says head of household with a qualifying dependent. Do you want to elaborate a little bit, Latrice?
I will admit that my mom, I don't know if she's on here or not, but I used to say, but I am the head of the household. I got my own place. And she was like, where you're dependent at? And so I can laugh at that because that used to be me. And so that is a misconception. You have to have a qualifying child, a qualifying dependent to be determined head of household. For those who don't have children or dependents, that no matter what, until you get married, your status is single. You know, you can have your own house, all you want to, pay your whole, be Miss Independent, because I'm right along with you. But if that's not your status, you have to have a qualifying dependent. And it makes a big difference. And that's how you get in tax trouble when you abuse the filing status, because the standard deduction for these statuses are totally different. Another status, you said married filing joint and married filing separate, and the qualifying widow. So for single filers, for tax year 2021, your standard deduction was $12,550. So we'll talk another day about why the standard deduction matters, and for those who choose to itemize, why you need to know what the standard deduction really is. For your married filing separate, married filing joint is $25,100. Married filing separate is $12,550 because you're saying you're two different individuals, but you're still married. You want to file separate, so you get the same standard deduction as a single person gets. And then for head of household, it's $18,800. So I'm pretty sure we can see why some people try to sway towards that way of having a qualifying dependent so they can file head of household.
And look, it's so important. And there are a lot of married couples who file married filing separate for various reasons. Because let's just say myself. My husband tells me all the time, I don't want to owe taxes, and you're self-employed, or I mean, even if I give myself a W-2 because I am an S corp, and so I don't like to pay taxes, and I'm gonna have to pay it at the end of the year. And listen, so I know that. You know what I know? I know that my husband gonna file zero, and that he gonna have enough withholdings to handle whatever tax liability I have if I'm gonna have one, or I'm gonna be prepared to pay. Here's the other thing: what are your plans? What are your plans if you're in business? That is part of what your tax liability. You got to know and tell your preparer, your professional tax professional, what are your plans? Are you planning on buying something? Because they need to advise you in this year. If you're ready to buy a house, you need to know what does that mean when it comes to taxes, what it comes to the means to the loan officer when they get your tax return.
Mm-hmm.
And so my biggest thing, and this is my clients got a problem with this with me. Look, guys, taxes. The purpose of taxes is not for you to get a big refund.
Exactly.
People of color. People of color, I need y'all to get this. That has been a misconception for us. I'm just going to say people of color because those are the people I deal with the most. All right. So, you know, everybody may be like that, but I'm saying that because that's what I can relate to. Those are some of my clientele. And I want y'all to get this, to understand taxes take care of the infrastructure for the federal and the state level. The reason we pay taxes, let me just do this real quick because this is one of my pet peeves. In the city of Petersburg, compared to the county of Prince George, Colonial Heights, Chesterfield. Let's just talk about this. Those counties, those other cities outside of Petersburg, guys, the reason their infrastructure looks so much different, the reason their infrastructure looks so much better, let's just call it what it is, because the citizens of those localities understand that their taxes take care of the infrastructure. So they pay taxes. They put the amount of money that they make on their businesses on their tax return, even when it means that they're going to have to pay taxes at the end. Why? Because we can't, I don't care how many holding companies, I don't care how many tax shelters, I don't care how many LLCs and other entities that you develop, you're going to have to pay some taxes. Don't fall for the okie doke. Donald Trump didn't pay, so I'm not paying neither. Don't fall for the okie doke. I'm just trying to get you in advance and let you know. I may not never get another customer because of that.
No, but you know, that's the thing. I always tell people that your goal isn't to get a huge tax refund, because if you get one, then you need to think about it like, I let the government use my money interest free for a whole year. A whole year, they were able to use the $5,600 or the $7,500 I got back. Because that's technically your money. So they used that money all year long, interest free. Didn't pay you no interest on using that money at all. And now they're giving you what you're supposed to get throughout the year. So when we move on to the W-4, I'm going to tell you how that is going to kind of help you or hurt you, however you want to look at it. But that's the thing. Like, I like it when I'm almost even. I don't want to owe them. I don't really want them to pay me back. I want to, because you have to survive. Like, tax season is 4 months out the year, but you have to survive and live. And even with the refunds that people get back, is that enough to sustain you for the rest of the year?
Correct.
If you struggle during the year to make ends meet, if you have to swipe credit cards to pay bills, to provide for your family, then you need to go to your HR department and make some adjustments. Because if you always get back these huge refunds, but on the other side of things, you got credit card bills up to here because you just can't survive, you're always paying your light bill with your credit card bill, then something with your finances is off. And you need to start in the HR department and say, hey, you know what? Maybe I got too much taxes taken. I get $8,000 back every year, but then I'm paying interest on these credit cards just to make ends meet. And so that's where your tax professionals and stuff come into play at, because we can kind of take a look at your income and look at your refund or whatever and say, oh, you know what, this is what I will advise or suggest that you do to kind of help you out. Because survival is more than about a refund or one time of the year. It's about trying to make it each and every day. You know, finances is one thing that can stress the whole family out. about just, because nobody wants to be borrowing from Peter and paying Paul, as we say. So you have to look at it like a whole entity. It's not just giving somebody your W-2 or whatever. Think about your whole finances. Like, how can I make myself better? What is it that I need to do so I can bring this money home so me and my family are living better?
Absolutely. And that is the critical piece for most people don't realize. And it doesn't matter. Listen, it doesn't matter whether you're making 20,000 or 100,000. The same principle apply. The reason you can take that, if you're getting the earned income credit, let me say, we didn't talk about the advanced earned income credit. You can get that in advance. They've always had the advanced earned income credit, but you've got to know how much of that you're eligible for. You've got to plan so that if you get the advanced earned income credit throughout the year, at the end of the year, when you file your taxes, you've already gotten the credit and you've put it to good use. You've invested it. I tell clients, if you know that you're going to pay taxes at the end of the year, you can put that money into an interest-bearing account. Let the interest pay the tax debt.
Yeah.
Let the interest pay, but you've got to plan for that. Okay, yeah, we plan on taking a vacation at tax season, but what would it have helped if you had planned and put that money in an interest-bearing account all through the year? So you still got the vacation money. That's called a short-term fund. Just like an emergency fund, because at tax season, everybody's got an emergency. Everybody's got an emergency from January to April. They got debt that they had not paid all year long because they knew they were going to get a big refund. And now you're trying to catch up. But guess what? That only comes one time a year. And if you could plan it by listening, by doing the right things, by diversifying, doing so many things. All right. That's enough for this. That we done badgered y'all on that. I'm going to let Latrice talk about the W-4. Because I haven't, look, guys, I haven't mastered it. And I know that we both, picked up pieces to make sure that we could talk about. This is not one that I just looked at this thing and I can tell you, advise you what to do, but I'm waiting to hear. I'm going to learn something tonight myself because I'm sure that she done digged in, because this form is ridiculous. All right, let me shut up.
So the new W-4 it allows you to put your dependents, but it's based off of the money that the business says you're going to make. So for those of people that are salary, let's say, for instance, that you make $100,000 a year. All right. So there's nowhere on the form to put the money that you make, because you turn this form into HR and they know what your salary. Even if you make $12.50 an hour and you're a full-time employee and you're supposed to be working between 36 and 40 hours a week. All right. So the goal for the new W-4 is for you to pay as close to the exact amount of taxes for the whole year. So when you get ready to file your taxes the following year, you won't get these huge refunds, but you won't have these huge tax bills too. So you put down your filing status, and this status is what you will file, and it's very important because if you put down head of household on this W-4, but when you go to file your taxes, you're like, you know what? No, I'm not carrying a child this year. I got to file single. Then remember, I just said that the standard deduction is different. It's $12,550, I believe, for single, $18,800 for head of household. So if you put down head of household for your W-4 for the whole year, that means that less taxes was taken out because you have a dependent to take care of. Whereas with single, they didn't take out as much. So now when you did it that way and it wasn't correct, it's a good chance that you're going to have to pay something back because they're trying to get as close as possible as you can. So you go down to step 2. Now step 2 only applies if you and your spouse file jointly or if you have multiple jobs. And then it's on the back of the form later on to show you how to break down how much to take out, whether you're going to do this on a separate W-4 at your job and inclusive of that, or whether you wanted to have it all inclusive on one form or not. Then step 3 tells you if your total income will be $200,000 or less, or $400,000 or less if married jointly, then we need to know how many children that you have under the age of 17. Take that number, you're going to multiply by 2,000. And then if you have other dependents, because remember I said my son will be 17 in September. So this is where I go from the 2,000 to the 500. You get to multiply the number of other dependents by 500, and you put that amount on line 3. Now, that's all you do. But on step 4, these are all optional. And this is where I'm talking about. You have to decide whether you want more money taken out because you're tired of paying these high tax bills. You do have the option to put extra withholdings to be taken out on here. That's it. You sign the form, you turn it in, and they take care of the rest. I think the problem is people are kind of so used to like a lot of taxes being taken out of their check. And then like one guy was like, "Oh, I think something's wrong." I said, "No, you said you filed head of household, you got 2 children, and your wife doesn't work, so she's your dependent. So that is $4,500 for your dependents that you get to claim. On top of less taxes taken out because you filed head of household. If there's any chance that that's going to change, you need to go back in HR and you need to change that form immediately. So personally speaking, what I'm going to do, if you've been on your job before this form changed, you didn't have to go change anything at all. Nothing changed. If you think that you are paying too much in taxes, then you have the option to go to your HR department and request a W-4 and to update it according to the new criteria. You can do that. So I will be one of those ones that will have to go in there because now I want to change my child is going to be 17. I won't get $2,000 credit. So I need to go in there and change mine to include this one dependent for $500 and then my filing status as well. It's going to take more money out, right? So remember I said that was one option you have. If you have a job that has retirement plans, I work for the government, so we have TSP and we have pension. We can't adjust the pension amount. That's already set. But you can adjust your TSP. You can contribute to your Roth. So what I would do is I'm going to put more money into my retirement. That's putting money in my pocket when I get ready to come out of the system. So therefore the money, so I'm going to figure out, okay, well, I went from 2,000 to 500. Let me play around with the numbers and see what I would owe based off my salary right now. If I didn't have anything else come in at this point, how much would I owe? I would take that and make it a percentage. And that's the percentage that I'm going to add to my TSP. I just don't desire, I need to make sure that I'm going to be okay when it's time for me to retire. I think people need to understand that too, that what you pay for gas in 2022 will not be what you pay for gas in 2040. That your price of groceries is growing up. And I say all this to say you have to remember the inflation. Like $1 million seems like a whole lot right now, but will that $1 million sustain you for 20, 30 years if you retire before your rightful age? So it's a lot of things that come into play. And this is all inclusive of retirement isn't separate away from taxes because it's still involving your money and how you use it wisely.
Yes. Oh my goodness. And so let me say this about the retirement and for those people who are still in companies who have matches. I know that's not on our topic, but I need to say this because that's free money. And people don't always realize that they're leaving something on the table.
Yeah.
If your company is matching up to 6% and you're only putting in 2%, you're losing 4% of free money.
Yeah.
Not only are you losing 4% of the free money, that also will help you reduce your tax liability at the end of the year because it is pre-tax in most plans. That's from work. Okay. Oh, sorry about that. So you guys got to understand that when you don't take advantage of the free money, you're leaving it for the company. There's not too many pensions out there, but some companies are still matching.
Yeah.
And so if they are
your flexible spending, like if I planned ahead for my son's braces. I knew that my son's braces, we submitted a authorization to the dental company and my insurance company to see what my portion of the braces is going to be. I did that like around October a couple years ago, and they said, okay, Miss Davis, you're going to have your part will be $2,500. So I put in $2,500 in my flex spending. That means that they took that $2,500 over and they evenly took it out over the course of a year, every pay period. That means it reduced my taxable income by $2,500. And that means that I went there, wrote a check for the $2,500 to the orthodontist, and then they gave me the money back. Now, it's not really giving it back because they take it out your check throughout the year, but at least the money is already there. I don't have to worry about stuff like that. So if you have a chronic illness, if you are planning for a major surgery, if you're planning to do a lot of dental work, the end of the year is the time to get those numbers together to see if your company has a flex spending and to put that money to the side, because that you can use your flex spending to cover copay. You can use it to cover your medications. All this stuff can be covered in your flexible spending plan. And it's a tax advantage. That money is taken out of your income before your taxes is taken out. And so therefore your tax liability, taking it out of your check, is reduced. Because when I did my taxes this year, Patricia, I was like, oh, you know what? That was a good game. I ain't paid that much in taxes. Because I did my flex spending and I contributed more to my TSP. It didn't get me in any tax trouble because it's all legal. The thing is, sometimes, like she said about the retirement, people leave money on the table. The minimum you start off with the government, I think like 3%, but you don't max out. You don't meet everything till you contribute at least 5%. So if you only holding that 3%, like she said, you left 2% on the table. Free money.
Oh yeah. And so here's the thing about the flex spending. I also want to, it is great. I love it, but you got to plan, because if you don't use it, most of the plans, they don't roll over. It phase out. So you have to use it it used to be by March. Now I don't have a flex spending because I work for myself, but it's usually
I had to submit my receipts by April. But when COVID happened, what they did was, a lot of people use their childcare portion, and then like with the daycares being closed and stuff, they allowed them to carry, depending on the plan, they allowed them to carry that forward. But like she said, yeah. So Tracy Manley said people are really missing out, not understanding flex spending. They are, Tracy. Like at the end of the day, I knew Tay had to have braces. He's a diabetic now, so in my head, I know he goes to the specialist every 3 months. I know how much his sensors cost for his meter. All this stuff, I like wrote it down. I said, okay, so I got some dental work I'm getting done this year. This is how much it's going to cost me. And you have to make sure that you use it. I use it for eyeglasses, any of this stuff, because I swipe a card, I go in there, it's paid for, and I keep on going. Swipe a card, go in there, it's paid for. And so it's like a big tax relief. Some people may not think that $3,000 is a great deal for like determining your taxable income, but it can either take you over or put you under for a new tax bracket. You just never know. So like, I work night shift, so my base salary is based off working days, Monday through Friday. But we have night shift differential, and I have weekend differential. So it's like, okay, so that's more money. How can I help myself? Because I always like to keep some coins in my pocket. So, these are things that are very important. You got to be able, you get out there and you go to work, whether you work day, evening, or night shift, and you go out there and you work these jobs. They have all these offers on the table for you. And sometimes you missed out. If you don't have a retirement plan at your job, you can do your own individual IRA. They are more interest bearing than a bank account. Put in a savings account. I have a emergency fund, but I know that I'm not going to yield that much interest off of that savings account as I would if I do in a retirement account. So these are all the services that financial professionals offer that are beneficial to you. Like she said, some people don't want to pay for some services, but at the end of the day, if it can save you money on paying taxes, if it can put more money into your retirement account, then I feel like it's worth it to do that investment.
It's definitely worth it. And I want to add with the flex spending for medical, most people do not qualify for the itemized deduction for their medical. So this is why this is critical for you to take advantage of that flex spending, because you need 7.5% of your adjusted gross income
Has to be for medical bills.
before you can get a deduction. Let me say this so that it makes sense. Before you get $1 of a deduction on your medical, you've got to spend over 7.5% of your adjusted gross income. And so let's say that's $3,000. Well, you got to spend $3,001 before you get the dollar deduction. You're not getting $3,001 as a deduction. You're only getting the dollar because you had to get over that amount. And so that's critical, because a lot of times most people do not have enough medical unless you have some type of critical illness.
Yeah.
You had a lot of medical, last year, but still, look, last year I had surgery. I met my deductible and I didn't have to pay any co-pays when I got meds and all this stuff. But it's still, at the end of the day, I had insurance. So they cover the bulk of the surgeries that I had to have. Yeah. Otherwise, it would have came out of pocket.
And another thing, you can't write off your insurance through your job, because typically that's taken out pre-tax. People will say,
"Can you say that one more time?"
People will say, "Well, I pay into my I get insurance through my job. I can show where I paid." I said, "But that's pre-tax, and it's not." It's sort of like when I worked at VCU and the parking was pre-tax, and they deliberately did that so that you cannot write that parking off on your taxes. It was taken out before your taxes was taken out on your income. Therefore, it reduced your taxable income.
Most definitely. I think one of the next things that we may talk about the Schedule A in whole and its deductions, and go from line by line so that everyone can understand how to better prepare themselves. Even if you've already done your taxes, listen, this is what I tell my clients who used to itemize, and maybe now, because the standard deduction is higher, I don't want them to stop what we do to collect the data to see whether or not they're itemized. I don't want you to automatically assume, I'm not going to be itemized this year, because that's not necessarily so. You may still be able to, because guess what? In the state of Virginia, if your itemized deductions come up $1 over the standard, that's great for you. You know why? Because the state of Virginia will take your itemized deduction minus the state withholdings and use it as your standard deduction. That makes for a bigger state refund or less tax liability.
Yeah. Also, if you have a home office, if say for instance, your mortgage interest does absolutely nothing for you to itemize with, you can use that interest on your deductions for your business. Now, that all takes like measuring your office space. It's a whole line of stuff that you got to make sure when you use the home office. Like mine is strictly for my business. There is not a bed, cot, no nothing in here. If Prince George decided they wanted to come take a look at the space that I said that I had for my business, I wouldn't get in any trouble. You can have a home-based office, but it's criteria you have to meet. And on the flip side of things, I never have enough to itemize. But I take that and offset it for my business. My interest that I pay on my mortgage interest that I pay, my mortgage premium, all these things that I get to use for my home-based office, because, when you do deductions. So I think doing the Schedule A form is next. That would be beneficial, because I think people don't understand like the threshold you have to meet. But it's also, like you said, important to continue to keep up with the information, because it can benefit you on your state side, even if it doesn't benefit you on your federal.
Most definitely. So, guys, look, I don't see any questions. We've been on for just about an hour, and I think that that's enough to overwhelm you all with tax talks for our very first night. I'm excited about, let me say this. Even though me and Latrice have talked on the phone, we had never seen each other. No. We didn't know anything about each other. If I'm correct, I believe Mr. Manley introduced us by giving her my number to call and ask some questions. So, great friends of both of ours. So I am excited about this relationship. And even some of the other tax professionals that I'll be bringing on is because of just somebody else referring them to me to ask a question, or I've been introduced them by one other reason or another. So I'm exactly you see, Andre said, "Yep, it was him." We're gonna give him the credit that's due him. But this
give
is
him his credit, Lord. Give him
yes,
his
but
credit.
this is what I like. And there's enough business for us to go around that we can complement one another and share information. So this is important that people see, for me, a united front in businesses so that they understand that we're not in this by ourselves. And so we all have someone else we can talk to. We're not afraid to sharing information. We're not afraid about clients and all that, guys. I have none of those qualms, not with Miss Latrice or anybody else that I bring on, because who is meant for me is meant for me.
Yeah.
And that's
And
just
another thing, this is the very beginning of Women's History Month. So if anything that
yes.
you do, you need to, it's time for you to, you like your somebody in the same business with you is really, as much as they say that's your competition, she's not. My belief is that whoever God got for me is for me. Miss Winfield can't take that person from me. If she take that person from me, that won't my client no way, and I'm okay with that. And so I will never. I'm not the type in the business to kick dirt on anybody. I call her and I be like, I got a question. I done sat here, rack my brain. Can you help me go through it? And that's how you learn. You know, my mom has always been one to tell us you need to look it up. Let's talk about it. And then I retain the information better that way. So before I place a phone call with anybody, I've gone through everything possible. And most of the time she can tell you it's just for her to reinforce, because I probably got the answer, but I just need, can you help me? Can I talk to you? Can you talk me through this? And then once we get to the end, it was correct, but I just needed, because she's a pioneer and she's been doing it for years. And so you just need somebody that you trust that will give you the honest answer. She's not, integrity is a lot. I tell people I sign my name on your income tax forms, and that's my PTIN number. That ain't, that's not yours. And so therefore I can't put no fraudulent information. I'm not the person that you need to do your taxes that's going to fudge some numbers. That I can tell you that. So I appreciate the platform and everybody that listen in on and ask any questions.
I do too. I want to thank each and every one of you. Thank you, CT, Cartelius, Andre, Tracy, Dolores. I call her Mary. Thank you guys. And those I can't see, I believe, for those individuals. I just want to thank each and every one of you for coming on, because it's so important for us to share information, share knowledge. Here I gotta go say this. The word of God says our people perish for lack of knowledge. And a lot of times they perish because the individuals will not share the information. And that's what makes this so harmful to our culture, our neighbors, our other businesses, our colleagues, is because when you don't share information and you believe you need to hoard it all for yourself, you're not benefiting anybody, not even yourself. So I love the fact of sharing information. So I'm excited. I had shared this to one of my other colleagues, tax professionals. She owns Tally Financials, I think the name of the business. Forgive me, Shakira, if I got it wrong. But I wanted to do this, and I kept saying I want to do this. And I finally said to Latrice, we're doing this next week. Give me your dates. Because I've shared, I want to make sure I get information. I am about helping people, and I may overload my plate because I'm trying to help. And that's what we're going to do. We're going to help you guys through it. Any questions you guys have, I'm sure you can send them to Latrice. You can send them to myself. You can post them on our pages so that we can help you guys. We're excited about what's getting ready to do. We're excited about making sure that you guys have great information to be successful in your personal lives and in your business. And so I'm excited that when I saw that on the calendar about Women's History Month, we're going to make history this year about some women coming together. We're going to do this like never before. We're going to make sure that we inform you guys on all levels. So ask away. What we don't know, we will research. So that's a good thing. We're talking about, let's say the next topic is going to be the Schedule A. And when we do the next one, whatever questions you guys have, look, you can post them in advance. Maybe you've been trying to figure out, should I itemize or should I not? Do I need to save this? And I'm going to even tell you the telltale signs that I've noticed for people to get audited and how people cheat. We're going to say that automatically on the Schedule A. I'm on, guys, listen, I am unfiltered when it comes to my business and my integrity and making sure you guys get it right. So you're not getting Pastor P. You're going to get Patricia A.M. Winfield. That's what you get when you come to my office. All right. I might pray for you on the side if we need to, but that ain't what my focus is when you come in here. God is already in the place. So, all right. That's enough for me. Latrice, you got anything you need to say?
I've enjoyed my time here. Chantel is on and she will tell you that I do not like going live, but I'm adjusting to it. I'm adjusting. It's going to be okay. I think I'll get used to it after a while. So I look forward to the next one. I think it was a lot of helpful information. Not sure how does StreamYard work? Can they share the live after it goes off?
Yes, ma'am.
Okay. Yep. So if you think anybody needs information, you just feel free to share it, because it may be something they have always had a question about, and maybe we answer the question. And I look forward to the next one next Tuesday at 6 p.m.
Next Tuesday at 6 p.m. But we're also going to be on Thursday. We haven't figured out what Thursday's name. I had this name, so y'all can throw me somebody told me what I said, Thorough Thursday, didn't make sense. So I'm going to leave that alone. And we're going to have a new name for Thursdays, but Thursday is going to be about business. Okay. So I'm excited. Thank you, Tara. I appreciate you so much. I want to say this really quick, and I'm going to get off this line. Tara's a good friend, but her mom used to work with me. And so she was really important and strategic in me to make sure that I kept my integrity intact. And I just could not do this for years. She was here with me before she worked with me. She helped me. She pushed me. And so I know what that's like, to push somebody else and make sure what they say they're going to stand for, that's what they stand for. And so I want to make sure I do what she did for me for somebody else. So I'm excited. And I am, thank you, Joe. I appreciate it. Mr. Johnson is another tax professional, has opened his business. I believe it's in Richmond. So this is what it's about, guys, not just women either. I believe there's quite a few men that do this business, and we want to make sure that they have the same opportunity. All right. All right, guys. Thank you again. We appreciate you. Tuesdays is Tax Talks, and we're going to have whatever topic you need us to talk about, and we're going to make sure we lay it out. And if we don't know it, we're going to research it and get the answers for you. We're going to get some advice if you need something. This is the place to do it. And it's not just talking about today. It's not just about today, guys. It's about for next year, for the end of the year. Ms. Pope, you can get it later. It should play on our pages as we share, so you'll be able to catch the information. But if you got questions, just throw them in the live. Just throw them in the comments so we can answer those questions. We'll go back and the live will play, and you guys can ask questions. Anybody that come on, if you ask the questions, we'll go back and we'll share the information and answer your questions. All right, guys, thank you again for joining us. We appreciate you. Have a great night, and we look forward to seeing you guys on Thursday. Share next week. Thursday this week, 6 o'clock sharp. All righty.
All right. Have a good night.
Have a good night, darling.